Assalamu alaikum, ciao, konnichiwa, bonjour, hola, guten morgen. Good morning, good morning, good morning. It's Ken at 10 and happy Diwali. It's a very special occasion for our Hindu friends, and we're wishing you a Diwali that brings you happiness, prosperity, and joy to you and all of your family. Hope you have a fantastic celebration, guys. How are you today? Big, important day today. It's the day when the Monetary Policy Committee meet. They're doing this again in December and February. And today's meeting, they may decide to raise interest rates. And behind me is a graph of projected expectations of rates. And I mean, bearing in mind where we are now, that's quite a significant increase on the one hand. On the other hand, is still significantly below historic averages. Of course, if we had historic averages now, it would destroy many individuals and the housing market. Many savers will be grateful for interest rates going up. But those with mortgages and credit card debts need to be aware, because it is possible, and we'll find out at lunchtime today when the Monetary Policy Committee meets. Why are they raising rates, you might ask, in such awkward and difficult times? And the answer is inflation. The monetary policy of the Bank of England have to write to the Chancellor if inflation goes beyond certain limits. And at the moment, I think the limit is 2%. And they have to explain what they're doing to try and curb it. And the only thing that they have, the only weapon they have against rising inflation is interest rates. How or if they will deploy them is quite another thing, because there are two sides to this coin. The government have borrowed massively because of the pandemic. And of course, higher interest rates actually mean that they will be paying back higher amounts as well. So for sure, we won't see a massive interest rate hike. We may see an interest rate hike, though, and we will see today. It's happening at lunchtime today. If they don't raise it, they do have other chances. There's a chance in December. I'm not sure that would be politically favourable, though, doing it in December. And then the next time after that is February. So it'll be really interesting to see what happens today. Purple Brick shares have just fallen off a cliff. That's an interesting one to note. This idea of DIY agency not proving as successful as it once was. They're being sued by former brackets, inverted commas, self-employed agents all over the place. There's a group of them got together, and on top of that, their new model where they're employing staff as opposed to self-employed is causing them many problems. And, you know, many times when we deal with them in a chain, we do struggle to communicate, and, you know, it's like, oh, no, not them in a chain again. It's a real difficulty for us. So how are you? Hope you're doing well. If you haven't been here before, thanks for coming. This is Ken at 10. We're James Alexander Estate Agents. Today, I'm back in our offices in SW16 Norbury, which is situated between Streatham to the north, Croydon to the south, and got lots of good instructions on at the moment. Lots of things that need a bit of modernisation, which we love and people love, you know. Let's look at a few of the headlines now. In the Daily Mail and the Independent, the average house price tops £250,000 for the first time. And this says that house prices have hit record highs, with the average property price passing the £250,000 mark for the first time. Nationwide's house price index shows that the typical house is now £250,011. This comes after values rose 0.7% in October, up from 0.2% in September. Year-on-year prices are up 9.9%, with this down slightly on the 10% recorded in September. The analysis shows that there were 72,000 mortgage applications in September. Nationwide notes that possible base rate hikes from the Bank of England are pushing up mortgage rates, saying this may dent the property market. Robert Gardner, their chief economist, said demand for homes has remained strong, despite the stamp duty holiday coming to an end on September 30th. However, a number of factors suggest the pace of activity may slow. Yeah, and we echo that, but we expected it to slow anyway, for many reasons. And I don't think it's really anything that we should be too worried about, because actually the interest rate hike will be slight, although it will push up average mortgage rates. If you've been watching Ken at 10 for a while, you'll know I've been advising you to fix for some time. Expectation of an interest rate rise is there, and long-term rates are rising anyway, regardless of whether the Bank of England increase their rate. Of course, the friendly societies, building societies, don't have to raise their rates just because the Bank of England has, but it is an opportunity for them to raise their rates and then return money to savers, because of course savers have been the real poor relations in this scenario. Many, many people have struggled because they've got their savings, they've got their pensions, and they're waiting for a return that doesn't happen. And inflation, of course, erodes the value of their money. If inflation's at 5%, then that 100,000 you have by the end of the year is only worth 95,000. You've lost £5,000. And that's what's been happening to many people that have got their money in cash and savings, in long-term savings with the highest rate they can get, which is often way, way lower than inflation. So what is the answer? Well, the answer is to diversify. And of course, this is not financial advice. But our view is that to have a portfolio of property is a fantastic hedge against inflation. Why? Because rents tend to go with inflation, and house prices, as we've already discussed, do tend to go up with or in excess of inflation. When you combine those two returns together, what you find is that you're protected against inflation. And many people say, well, if I have a portfolio and my rent stops, then, that's a real problem. That's a real pressure. And that's true. But it's also a real pressure losing money every year in savings when there's no real return. And people say that the larger the portfolio, the more the worries, the more the pressures. In fact, the opposite is true. If you've got one property and you're renting it out and the rent stops coming, that's a real pressure for you and your family. If you've got 4 properties and the rent stops coming on one, the other 3 will more than provide enough to support that one while you get through whatever the difficulties are on that particular one. So a medium-sized portfolio can actually protect you against rather than increase your risk in some respects, if you see my point. And of course, property is the long game, it's not the short game. So, it's not for someone that's looking for a quick return, largely because there are plenty of people out there that will pay full market value for what's available. So there's not much margin in properties these days because there is so much access to information that people tend to come along and they'll pay the going rate. They'll exceed the asking price on many occasions. And as you know, many times we set offers over prices and we exceed those by significant margins, as much as 50 or 100,000 in many cases. The Independent also reports that ultra-low mortgages are expected to disappear from the market amid expectations of the Bank of England rate rise. Last week, the average 2-year fixed rate mortgage jumped, and we expect that to continue, of course, but we'll see what happens today. Today is quite critical. We'll see what happens there. The government needs 330 billion to hit government targets for climate change. Well, this is interesting, and it's something that we'll be tackling in the podcast. Next week, we have Bob Harris, who's an expert in energy saving measures and has built a thing called the Earth Dome, which is an A rated on the EPC development right here in Norbury. And he'll be telling us about air source heat pumps, ground source heat pumps, what you can do, what his opinion is of the technologies, what emerging technologies are coming along, and what you can do to address the coming C requirement for EPCs. And that'll be an interesting podcast. That's not this week's one. This week we'll be talking about portfolios and things, but next week we've got Bob Harris coming on. Really looking forward to that. That'll be a really interesting subject, I think, for many of you thinking, how can we address what's coming up? Apart from that, the weather here in southwest London is crisp and cold, not very bright, a bit grey and overcast. And generally, we've got lots of offers coming in, lots of new instructions coming up, which are quite exciting for the time of year. And given where we are, that's good news for us. In terms of the market, generally, we're finding there is still a massive undersupply. One thing I've always said about us Brits, when we're not sure about things like interest rates, what we tend to do is sit back and wait. And that then leads to shortages in the property market. And the difficulty is both ends. On the one hand, buyers can't find anything to buy. On the other hand, sellers, if they put their properties on the market, can sell readily, but can they find somewhere to go because not enough people are selling? So it does go round in a bit of a circle. So that's it for Ken at 10 today. Hope you have a fantastic day. Look after your family and friends. We'll be back tomorrow and we'll be recapping on what's happened in today's MPC meeting about interest rates. Until then, stay safe and well. Look after your family and friends. And of course, happy Diwali, folks.